Hi, hello, hello. How is everyone doing today? How you doing, Trapper? How you doing? Backzito. Sorry if I missaid that. Grab a beverage, sit back, relax, and yeah, let's get this going. I am going to just do a couple things. I'm gonna wait till people trickle in here. So in the meantime, I'm just gonna set up a couple of housekeeping things, if that's all right. See here. All right. Just gonna go ahead and take a banner here. Create a banner. Scroll. One. Three. We're just gonna be waiting for just a couple minutes to allow people to trickle in. Hey, if you guys have access to the Reddit page, try sharing this so people can hear what's going on. Today was a good day. That's in terms of Clover. Last time I checked, I mean, things can change really quickly in the market, but banner there so that we can put that there so for people can see. Hey, no, it's all good, guys. You know, it's just want to help out the community here and definitely give back to the community here because it's unfortunate. You know, this stock has definitely, you know, you guys definitely been through a lot. You know what I mean? Like people don't understand. Like, you guys definitely been through a lot. I mean, we all have, honestly, but a lot of new investors came into this stock, so they don't really. They don't have that much experience in the market here, so it seems that in the after hours we trickled down. All right. So I guess it's safe to say this is everything that I've calculated, and I looked at the numbers. It's safe to say. I guess it's. Oh, sorry about that. That's a replay. Let me turn up. I have another window of my live. Sorry. It's my third live. I should get better at this, right? So it's safe to say that I looked at all the numbers, guys, and it seems to me that Clover Health is, it's looking pretty good. It's looking really good. And I'm going to show you guys exactly my intrinsic value calculation. Our projections here. If you guys can, share this on StockTwits. Someone just told me they did that last time, and it was very helpful. I don't have a StockTwits account. Again, I'm new to YouTube. I've been on YouTube for 6 months. So if you guys don't know who I am, my name is Al. I am a long-term / short-term investor. I'm an omni trader, right? But mostly I'm a long-term investor. I've been investing in the market for 10 years. I got 10 years of experience. And yeah, you probably, I'm a little bit more analytical than most YouTubers. Sorry, that was my dog there. Get over here, buddy. Good boy. What? So let me go ahead and answer our quick questions. So that's what I'm saying. Like in terms of the movements change and things are just, things happen so quickly. Can you update us a little bit on that? What did they say? Because I haven't looked at it. So on the other side of my life, I'm going to be a doctor. So I'm not like a YouTuber full time or something. I'm here to help you guys. we created a software for people to beat, essentially beat the market. I'll go over that, and just wanting to give back to the retail community. So yeah, update us on what happened. So we did not deviate a lot from the projections, no, but it will. Well, how about this? Yes, we did, but it's to the positive side. However, I am going to be including a bearish thesis, assuming that everyone starts listening to Elizabeth Warren and Bernie Sanders and decides to cut direct contracting revenue, which I don't think it's going to be happening. But we're going to do those calculations, and I think you guys would be pleased. Yes, so we're going to be doing a discounted statement of cash flow calculation, and then we'll do a normal multiple revenue calculation, which is very simple. We also will be talking about some things as well, Russia and whatnot. If you guys want to talk about Russia, give you guys kind of the gist of what's happening. Yep, we're going to go ahead and discuss that as well as the CFO. So I've gotten a lot of people. Yeah, I paused a little bit when I heard about the doesn't know the numbers or something, but we'll talk about that, right? I'm gonna just be very clear. I do believe there's going to be another share offering, and there'll be another video in the future discussing that in terms of graphing you guys when I think it's going to happen. Yeah, exactly. My same thoughts. Whoever talked about the CMS update, can you enlighten us? What did they say? So no one really knows the move for Clover Health tomorrow. But as a trader, you got to read the charts, right? And you go off of the charts. And we have a software to help you with that as well. It's just different. People don't like change. I appreciate that. So get other retailers to. I assume a lot of new investors came into the stock yesterday because of that jump, and they're thinking, I want to make sure we're very clear on the matter, and they set their expectations. All right, so let's go ahead and go through these. Posted on stock. Yeah, you can post any link you want. Let us. I mean, you should be allowed to. Oh yeah, no, I agree. It's just there's a lot of tension. If we lived we'll talk about geopolitical events of what's happening. We'll talk about all that. And what was the conclusion? Because I haven't looked at it. All right, so here is our intrinsic value calculator. So this is the Mastering Stock Market course. If you go to Intrinsic Value Calculator, oops, sorry. This is the developers page. We got to do preview. We're on the developers page. So this is Mastering the Stock Market course. If you want access, 24/7 access to our intrinsic value calculator, it'll be under courses and the link down below under descriptions. I'll pin the comment if you're interested. But essentially, this is our intrinsic value calculator, which goes 10 years into the future, discounts back at a 10-15% discount rate, divided by the number of outstanding shares using a perpetuity model of 2% to get you the number of shares here. So when I input the numbers here, guys, I want you to also look at the numbers, try to understand what I'm saying, and then also the numbers for the intrinsic value of the stock is going to be right there, that banger right there, okay? So promote leadership and governance at least 75. Yeah, okay. All right, so just a couple of disclaimers of what I'm going to be doing. So we're going to go to seekingalpha.com because I'd say they have the right amount of the numbers that we need right now. So we're going to go ahead and go to financials. And we're going to be looking at the revenue here and a couple of other things. But right now we're going to look at the revenue. And we're going to take the revenue from 2018, 2019, 2020, and then now 2021. It's not going to be 1.1 billion. Again, these numbers are in millions. The numbers that we're going to take now is we're going to take this number right here. The 14772, right? $1.4 billion, okay? So just a quick analysis before we get into the meat of the video and the calculation and the whole slew of things. You guys can hear me correctly, right? Let me know if you can hear me clearly, and then I'll be able to adjust the mic and do some maintenance on that. So long story short, the fourth quarter total revenue was $432 million. It was up 160% year over year, right? The lives under the Clover Assistant Management increased by 223%. And then they're expecting a total revenue to exceed $3 billion, driven by the projected 90% year over year growth in lives under management. Now, if you go to look at a aspect that they were talking about, the CFO, they believe that their projections are going to be anywhere between $3 billion to $3.4 billion by 2022. Okay, so if we go back to my projections here, I made a Clover Health video about last week. I have no idea when, but I put this graph here. Okay, so this is my graph. All right, so just to give you the ins and outs of it, the y-axis is in millions. So this is 1 billion, 2 billion, 3 billion, 4 billion, etc. And the x-axis is time based off of past and future projections. So from 2018, we have past projections. These are hard data numbers. And then the last three here are future projections. Future projections for 2022, 2023, and 2024. I appreciate that, EHL. I hope I said that correctly, 1219. So yeah, no, I appreciate that. So yeah, so essentially, they projected $3 billion, and if you go up right there, we see that they actually exceeded my projections. In fact, I projected them to have around $2.8 billion of revenue by 2022. They're actually exceeding my projection. They're doing $3 billion. I'm going to say $3 billion. I always like to take the low number. It's better to be conservative. Hence why my measurements are extremely conservative, guys. I mean, there's not, right? And if and again, we're doing exactly what these Wall Street analysts, and I honestly think we're a little better at what we do because, you heard the questions. If you guys didn't listen to the earnings call, the questions were unfortunately, a fifth grader would have been able to answer them. Very unsophisticated questions that these analysts were asking. And you can tell which analysts like the company and which analysts don't like the company. The ones that did the bookkeeping when they did the share offering, they had a great connection. In fact, they were one of the first people to ask questions. And the ones that did not like it, that were invested in another company such as Humana and all the other ones that we're going to be talking about today, well, they went ahead and, if you guys heard, just very terrible questions. So 2023, though, we actually projected them to be around $3 billion. So they're actually ahead by 1 year for me, right? So what that tells me is my future projections for 2024 is $4 billion. They might actually be at $5 billion by 2024. I'm going to say we'll call it $4.5 billion. Okay, just to be safe. So all in all, we're in line. They expect to be profitable in terms of being free cash flow positive by 2023, which is right here. I have them at 2024. Again, they're a year ahead of me, which is good, right? Again, I'm very conservative with my calculations. So everything that's happening is actually, this is good to hear in terms of profitability. So let's go back up here and look at these numbers real quick here, okay? Yeah, so let's ignore all the headlines. Let's go straight to the numbers here. Okay, so the total revenue jumped up from $166 million from Q4 of 2020, literally last year, year over year, to 432. And it's like 160 whatever % increase that they said. Now, the MCR, which is the medical care ratio or the medical loss ratio, what we like to say, is 102.8, when last year it was 109.3. So we're already starting to see significant drop between that. And then if you look at the non-GAAP versus the GAAP, the non-GAAP is when we do a couple of accounting tricks. So for people don't understand, the GAAP is what basically they measure in terms of what's standard through all accounting principles associated with filing and general accounting principles, so these analysts can understand what's happening. Non-GAAP is, it gives an opportunity for the company to essentially say, you know what, if we take out this expense, essentially it personalizes the financials associated with the actual business, okay? So by doing that, you can see that the MCR went from 98 to 96.7%, which is damn good. And if you look at the year over year, not quarter over quarter, year over year quarter, but actually total year over year, we're looking at a drop in the non-GAAP, right? However, we would see that there was an actual increase within the GAAP, and again, that's associated with COVID-related costs. Again, going public during this time was a catch-22 because yes, the market was valuating companies at such high revenue multiples that, you know, it was a perfect time to go in, and, you know, retail bought it all up. They bought Palantir, they bought Peloton over $150. However, the catch-22 of this was that they were losing a lot of money because they're a healthcare related company, right? So there's that. But, you know, COVID is starting to become controllable. A lot of states are starting to cut back on their mandates, so that's good to hear. In terms of salaries, benefits, we're going to go a little bit into that in terms of the numbers. We see an increase, which is expected due to the fact that they are increasing. All right. So am I making sense here, guys? Am I going too fast, too slow? Can you guys give me some feedback? Any feedback? Nope, keep going. I'll keep going. All right, so net loss, what's your price? Yes, so we're going to go in and we're going to calculate it in real time. We're going to calculate it in real time. Just join M is rich yet. So we're going to be going over the price projection right now. We want to go over the holistic approach of what's happening, right? Thank you. Very soon, I think. Maybe go a little faster. All right, you got it. We'll go a little faster. All right. Because yeah, you need to give me some feedback because I can blaze through this really quick. All right, so long story short, so that's the net loss. They have actually lost more money. So let's up this to $200 million. Currently, they have approximately $800 million in cash. If they keep burning $200 million every quarter, guys, we're looking at another share offering possibly by next year, honestly, right? So that's what I'm looking at, or probably even 2 or 3 quarters from now. But I think next year we might get another share offering, depending if they are profitable or they, you know, it's either going to be 2 things. Either they can't get a loan. If they get a loan, they're going to be, it's not going to look good, especially with the raise in interest rates. They're going to have a tough time doing a share offering because retail's already very upset right now, and I'm sure other companies would want extra shares of the business anyway. But they're going to have to decrease their operational expenses. Exactly, or once the share price spikes. So if they get another good quarter, blowout quarter, and let's say maybe 2 quarters from now, which I think that's what they're hoping, they might get a spike in shares. We might do $10, $12, spike in shares, and then all of a sudden they do a share offering, drops it back down to 7, 8, maybe 10. Who knows, right? But that's kind of what my thoughts are on that. Okay, so now lives under Clover Health Management, right? So if you look at the MA members, which is the normal, it's not the one that is the DC, which is essentially where the money is. We've only increased by 10,000 people, right? But if you look at the DCE benefits, this was just recently added. In fact, that's when I actually came online and started talking about Clover Health, because I said, okay, this is starting to become interesting. This might actually work, right? So the total lives under Clover management now has increased actually, and you can see it by a hefty chunk, right? So we're going to ignore the 10% basis points, but we're going to go ahead and move all past this. Well, I like the graphs here, so. All right, so this is the selected balance sheet and data equivalents here. So the cash, they got approximately $800 million worth of cash right now, specifically $791 million, okay? Obviously that's increased, not because they made that money, it's because they did a share offering, okay? And here are the total assets here as well, okay? They've increased as well. In terms of their operational expenses, here are someone asked me yesterday, this is going back to 10 this year. So no one knows the short-term fluctuations, but we'll definitely give you what I think. And again, I'm not a financial advisor. These are all just my opinions, and I recommend doing your own due diligence. But everything that I do, I'm just basing it off of what Clover Health gives me. All right. So these are the operational expenses. Someone yesterday asked me, hey, how do they spend it? Where in the world did they spend all this money, right? So if you look at it very clearly here, we see that the Medicare Advantage net medical claims incurred, it went up for sure. Direct contracting lives went up significantly, but again, they weren't doing it last year, or they weren't reporting on it, right? Salaries and benefits have increased as well, but that's to be expected because they're growing at such a rapid rate. I mean, what do you expect if they're growing triple digits year over year? Their general administrative expenses, impressive, that not increased that much. And overall, they burned approximately $200 million worth of cash. And again, this is, if this continues to go on, it's going to be difficult. They're going to have to figure it out, right? And we'll go into what that means, figuring it out. Okay, so here's the GAAP, MA, MCR. This is the normal filing equivalence to where all accounting principles are met. So by doing that, if you look at 2020, 109.3% to now 102.8%, we see a really awesome good reduction to MCR, which is good. This is exactly what you want to see, right? And again, the reason, these are, if you normalize this to a non-GAAP, by adjusting for COVID-related costs, you're actually seeing a reduction from 98% from 2020 to 96.7% of 2021. I expect that we're going to significantly see a major drop in this. But now you might be asking, well, when is it going to be to a point where it's actually going to be meaningful, like 85%, right? And my answer to you would be to look at the incurred MA/MCR non-GAAP by cohort, okay? Hey, I really appreciate that. Thank you so much. Again, every donation that comes into this channel gets reinvested back into this channel. I'm going to be a physician. I've been blessed. So anything that comes into this channel will be reinvested back into the retail community, back into education. So I really appreciate that. You have no idea, right? And I'll match it myself as well back into this channel to provide retail the best quality insights, okay? So by looking at the 2018, 2019, and 2020 Clover Assistant cohorts, I want to know what, because the whole thing about, and again, so my background is I'm currently at the Mayo Clinic. I'm doing a research here. I'm about done with it. We're in a brain-computer interface lab, right? And what that basically means is we're connecting the human brain into a computer to help paralyzed patients move, right? And why I'm saying this is that the bridge between technology and the human is starting to become intermeshed through the power of artificial intelligence. So if you have three circles, you have artificial intelligence, you have machine learning, and you have deep learning, right? And why I'm telling you this is Clover Assistant is actually a strong machine learning algorithm that gets readjusted to a point where it gets better after each and every physician input. My goal is actually because when I go back to Pima County, we have some doctors that actually use Clover Health. So I'm going to actually trying to get them onto this channel to give us their insights on the matter, right? And we might be able to, as a future physician, maybe I'll be able to entice them to get on, or we'll just pay them for an interview. Whatever is good. I appreciate that. Thank you so much, Mopar. I God bless you. I appreciate that. Thank you. So what this means is that over time, year over year, the MCR will eventually get better because the Clover Assistant will essentially be able to lower those costs. And you can see that significantly within this platform here. We see that here. In 2018, they have a 92.9%. 2019, 97.7%, 2020, 100%. And what that tells me is throughout every year that gets passed, the MCR decreases. Now, I wish they reported it. I'm sure it's probably going to be in their annual 10K report, but I want to see the progression so I can graph it. And I'm going to go deeper into that, right? But again, I only had a day to prepare. So by doing that, guys, right now, 2022, right? That's or let's say 2021, that's what we're in right now. 3 years of data gave us a 92.9%. What I want to know is I'm going to be looking heavily at 2018 and 2019, and I want to know how many years are we going to get to 85%, right? Because that's the max, right? How many years, correct me if I'm wrong, right? And that might be 5 years, 6 years, right? So I want to know how many years until we actually get to 85%. And these are going to be important things to look at over time. And I believe that is all when it comes to talking about the overview of what they reported. Okay, good. So now that we have this, now we're just going to do some basic kind of I call this a BS basic analysis here, all right? We're going to go more in depth. But if you look at here, okay? No, I appreciate that. I appreciate that. What is a cohort? Okay, so all right, let's go back. Let's what is a cohort? Okay. Let's go back here. So essentially, I'll just explain this to you. So long story short, what a cohort is they split off the 2018, 2019, and 2020 members by looking at essentially how has Clover Health increased or decreased the MCR. And that's exactly essentially how they calculate it. So that's essentially what a cohort is, the 2018 cohort, 2019, 2020, right? Thank you so much, EAGL. I really appreciate that. Thank you. God bless you. Thank you. So in terms of EPS, I haven't seen any calculations done, so I'm going to have to calculate it myself. To essentially calculate the EPS, you just take the net income minus there's no preferred dividends divided by the weighted average of the shares outstanding, or so we haven't seen that yet. It takes some time for it to update, but last quarter, I think it was negative 0.08, I believe, but we're not really looking too much about that. We care more about the expected rate of free cash flow to be positive and profitability and revenue multiple, or not revenue multiple, just revenue. Oh, that's hilarious. Okay. Hey, you learned something new. And I like these lives because I'm able to interact with you guys one-on-one. It's actually, it's really good. It gives me more feedback on what I need to do, right? Okay. So, all right. So this is the overall price projection for Clover Health. Now you might say price, the y-axis is not dollars, but this is the revenue multiple, right? So right now, to give you an example, Clover Health is trading at a revenue multiple of 0.6. That means for every $1 billion it makes, it's going to be trading at a market cap of 0.6, right? No. Yes, of course, still. Yeah, hey, ask any question you want. This is a learning. Again, Al Stock Trades LLC is a learning platform. We establish it to help retail traders, and we're going to go ahead and show you guys what else we have as well. But no, of course, ask away, right? I'm gonna pin that. Exactly, yeah. So that's exactly what a cohort is, and they're doing that for people like us to analyze the data to see, hey, is this even effective? And the answer is it is. And what that basically means is Clover Health is not just an insurance company. Clover Health it's a software company. It's a tech company, which means you're getting two businesses in one, which means the Clover Assistant could be licensed in the future, which means other companies could buy the SaaS, right? We'll get to that, okay? Okay, so by analyzing this graph here, we can see that the highest revenue multiple happened around June. I wonder why, right? At a 9.77. We can assume at that time point, that was a little overvalued, right? However, we can also assume that a 0.6 revenue multiple is also undervalued. I mean, who agrees that this stock is undervalued? I mean, it doesn't take a fifth grader to understand that this stock is heavily undervalued. I mean, come on, 0.6? You're telling me the market cap is trading at half of what they make in revenue, and not just that, they have more cash than the market cap exists, right? And the reason why is because of the cash burn. Management really needs to fix this cash burn problem, right? And we're becoming we're very patient with them because they're trying to grow. I mean, what do you expect, right? It's a double-edged sword, right? However, by 2023, 2024 and 2025, if this is not fixed, we're going to have some problems, okay? But I think they got the hint. They need to fix this rapidly, because we don't care how much you grow in revenue. The higher revenue you grow, the higher multiples that the market is willing to give you at the time when the market is giving, right? But over time, if the revenue, if you're not profitable and you're not generating good money, then we don't care, right? Just to give you guys an example here. So I drew a line here, okay? This is a 5 revenue multiple. So if we take the most extreme and the most extreme on both ends, and we divide that out and find the average is 5, right? 5 times revenue multiple, which is sitting around right here, okay? So what that means, very simply, if we do the basic math, I'll just pull up a quick calculator here for you guys. If you do basic math here, currently the stock price is sitting at $2.20. What is it? Let me see. It has a revenue multiple of 1.16. Sorry, it has a market cap of 1.16 billion. Pardon me, with a $2.32. Okay, good. All right, so 2.32. Let's see here, 1.16 times a revenue multiple of 5. We're looking at 5.83 divided by 1.16 multiplied by 2.45. Technically, right now, the stock price should be sitting at $12.25. That's where the stock price should be sitting at based off of the revenue multiples of 5. Now, there's a lot of problems right now. The Feds, inflation, but these are all temporary things. Now, Russia will go into that. That's a new development, and it could blend into China going into Taiwan, which we will go over. The United States will go to war over that, because just like Kuwait, we went over war for that small area because oil is semiconductor chips, which is coming a lot out of Taiwan, is the new oil, right? So, assuming that the revenue multiple, as we said in 2022, Clover said it's going to be $3 billion. Very simply put, if their revenue is $3 billion, the revenue multiple would be times 5 would be $15 billion. Divided by the current market cap of 1.16, times the current share price of 200 and at that right now 231, we're looking at a approximate $29.87 price target by 2023, right? So that these are giving you revenue multiples, right? And we like to look at this just to give you kind of a holistic view in terms of where the market could be pricing this. And this is a fast way for me to say, okay, this is where, I just do this in my head, right? But I'm trying to do it in live so you guys can see how this works. So so in my mind, okay, 2024, they're probably going to make, about $4.5 billion, right? So let's put it here, 4.5 billion multiplied by revenue of 5. That's 22 divided. So I want to know, what is it by 2024? So by 2024, the stock price should be around $44.80. Now, this is a fast way. I'm going to give you an accurate way looking at a discounted statement of cash flow. But again, this is kind of in your head kind of graph this. Okay, by next year, we should be around 30. That's why you see a lot of people say $30 because they're doing this calculation. This is the basic calculation, right? $30 by 2023, 2024, they should be at $44, okay? But I'm going to go ahead and give you a professional way of doing it, okay? So that's a little bit more accurate. All right, so here's this. And now let's take a look at the CLOV NMT market cap divided by the free cash flow. Okay, so what this basically means is it's negative, right? What this basically means is it's telling me that the higher this is, the higher it is, the more overvalued it is. Obviously, it's below zero. We know it's undervalued. But what it's telling me is now, because this is a negative number here, it's telling me that perhaps we might be closer than what we expected at being profitable, which is why they said we might see profitability by 2023. So profitability-wise, we're looking pretty good, I think, by 2023. I would say I'm a little bit more conservative. I expect 2024, right? So don't get your hopes up. Okay, so just like for people that just joined, Clover Health said 2022 projections are going to be $3 billion. They beat me. My projections for them, but they know the company more than than I know their company. But I said 2.5, they said 3, which is good, which means that all these other things should be higher, right? Well, yeah. Well, you're going to be. You see, that's short. You see that, but that's the thing, though. These revenue multiple calculations is short-term thinking. I'm going to show you the actual value of the company if they do succeed, and you're going to be shocked. Right? Okay. So now let's go over this. Okay, so this is our intrinsic value calculator. Let me put this right here. Okay, so Clover Health. We're going to end up using these numbers here. Okay, and I'm going to paint this beautiful picture for you guys. However, this number here is actually no longer 1.1 billion. In fact, we're going to be taking this number. Let me scroll all the way up, and we're going to be taking this number here, 1.4 billion, since they just had their earnings. Seeking Alpha hasn't updated it yet. So just to give you kind of where I'm getting these numbers. So so just give me a moment here. Let me drink some water, get some... I'm still working, as I say. You drink some water. I'm mentally drinking water, right? I like to drink some water. It's definitely a lot to take in. I don't like to throw shades at a lot of YouTubers, but the reason why I stepped into this game on this, again, I'm new to the YouTube. Like, I've been here 6 months, right? So I've been investing for 10 years. I was actually I actually taught the executive MBA, Masters in Business people, in the executive MBA program at the University of Arizona. Top 20, I think now, right? And I was teaching them economics and finance and all this other good stuff. But I was watching a lot of this information flow into YouTube, and I realized, I'm like, dude, there's like a 18-year-old, 20-year-old talking out of his mother's basement about stocks. I'm like, what the hell's going on here? And the guy has so many people listening to him, and I'm like, oh God, what is this guy saying? So I'm planning to stay in until 60 and take a little bit to 100. Yeah, so I'm curious though, because this guy's right on track. I mean, I don't know if you did your own DCF, but yeah, you're right on track, my friend. You know what? So okay. So grab a beverage, enjoy, right? This is coffee. Probably why I'm dehydrated. But here's our intrinsic value calculation. Okay, I'll put a link down below somewhere, but actually, no, there is a link, but I'll put a link in the chat. This here, if you guys want 24/7 access to this calculator, I've developed this calculator. It's right here, which essentially goes 10 years into the future and gives you a price target here. If you guys want this calculator, it'll be under courses. Make sure you use the coupon SAVE50. It's written down there to save $50. And essentially you'll have access. This is lifetime access, one-time payment to my calculator, and lifetime to Al Stock Alerts. All right, so let's get straight to work here. So I'm going to be splitting off the calculations in essentially two different components. The first component is going to be a really bullish thesis, right? Where I'm going to be taking into that, you know, I believe that Clover Health is going to continue to grow at these levels, and we're right. And the other one is I'm going to say, assuming Elizabeth Warren, excuse me here, sorry, I ate some chicken shawarma. I'm Middle Eastern, and let's put, you know, it's a little hiccup there. TMI, sorry. Okay, third time live. So we're going to be splitting off the other calculation by saying if Elizabeth Warren and Bernie Sanders, let's say they control, you know, politics, which they're not, they're gonna, let's remove direct contracting and let's just focus on the growth of the company beforehand. And they gave us a growth actually, and let me see if I could find it here. Here it is. So here's I pulled this from their share offering, and it says our revenues have grown at 37% compound annual growth rate from 2018 to 2020. Again, the direct contracting revenue didn't kick in until 2021, right? So I'm going to be using a 37% just flat, assuming it's going to grow 37%, which is a laugh because you guys already know it's growing over 100%. Okay, so there it is. Beef style, nice. So yeah, enjoy, and can you turn off the heater? It's getting a little bit. Yeah, I'm having hot flashes here. I'm taking too much nice and studying too much for boards here. Okay, so all right, so there it is. So now that we gave you the holistic view, let's get straight to it. So I'm going to go ahead and I'm going to include the revenues from 2018 to 2021. So by doing that, it's going to be two. So I'm going to just put the year. I'm going to put the years in here, so we can easily communicate with you guys. Okay, and then I'm going to go ahead and I'm going to give you guys projections because that's what it's all about. Okay, 2024 and 2023. Sorry. Like I said, I projected them to be at $2.8 billion in 2022. They're projecting $3 billion at least to $3.4 billion. So that's better than, you know, mine, right? It's good. More money is good, right? So 2023, I have them at around about $3 billion, right? Which they're going to do a year in advance. At 2024, I have them at $4 billion. Just to be conservative, I'm going to push it up only to 4.5 billion, which I honestly think they might in 2024, they might actually do 5 to 6 billion, but we're going to do 4.5 billion. All right. So let's go ahead. So in 2019, they pulled in $454 million. 2020, they pulled in $690 million. 2021, they pulled in 1,472, this is the current. Now, in 2022, they said they'll be able to do 3 billion. Okay. And then for 2023, I have them here. We'll call this 3.5 billion. And then 2024, we'll call it 4.5 billion. So again, I only have them growing only $500 million for the whole you know, that obviously this is I'm undervaluing this. Let's put it there. Okay. So, and here's 2024 to 45 million, so 4.5 billion. So to do this, what you want to do is to estimate the free cash flow of a business. This is how analysts are able to project out. And a lot of VCs and venture capitalists, private equity firms, and a lot of people that have big money, they do this, right? A lot of these low-grade analysts that just came out of school don't have any, wrinkles on them. They unfortunately don't do it this way. And some of it's politically swayed by their previous investments, such as these particular companies. Anthem, Humana, this guy here, and United, right? So just to give a quick taste of what I'm talking about, if we look at Tesla and we just focus our eyes here where it says free cash flow, negative, 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 all the way until we hit this one here, positive. That signaled to me that something's about to cook in Tesla, right? 2019. Let's look at net income. Negative, negative. That's why people say Tesla of healthcare, right? Negative. And then 2020, a year after this thing went positive here, the net income went positive in 2020. But look here, if you were attentive to this change, this inflection point in free cash flow, and if you were to look at Tesla in 2019, look what it was trading at. This was 2019, guys. $50, $60. We got the signal here. That's the one we got the signal that it just became free cash flow positive. But no one talked about it. Short sellers were still shorting. Analysts were still downgrading. But then look what happened afterwards. Free cash flow positive and net income positive. Boom. It ascended to its intrinsic value. We're going to be doing a 5% out of the revenue to estimate the future free cash flows. So to do that, I just basically take equal sign 281, 10.5. I'm just going to do, essentially what I'm doing is I'm taking this revenue and multiplying it by 5%. And if you guys want access to this calculator, there'll be a link down below under courses, along with the course and a whole slew of stuff. It's currently under beta access at 70% off, plus a $50 coupon, save 50. So I'm just calculating the revenue multiples here. Or not the revenue multiples, my apologies. The estimated free cash flow. All right. So here's the estimated free cash flow. Now let's go here. I know this says income, but we want to measure the revenue, right? So from 2018, we're going to look at it from 2018 to 2021. Okay, let's just look at that for a sec. So in 2021, they were able to pull 1.4 billion. 2018, they had 281. And I'm just taking this number here. This is the revenue. Okay. They're growing at 74%. Okay. Again, growing 74% for 10 years, it's very unlikely. Okay. Which we'll get into that. Since 2022, since 2022, they gave a projection of more than $3 billion. It's safe to say we can put $3 billion. So technically they're growing at 81%. So I'm just going to give you a price target based off of those numbers. And then I'm going to start fixing it in my 10 years of experience. Again, numbers only make sense throughout the user's experience, right? So now we're going to take these free cash flow. It doesn't matter what year it is. It just takes the average. So we're going to put the free cash flow that I estimated. You can already start to see the calculator updating and projecting out 10 years into the future. We're looking at 10 years into the future now. And we're going to discount back in today's value because we know that today's money is worth more than tomorrow's money, especially with inflation. I'm going to stop it at 150 here at 2022 because we're only doing the projection to 2022. Then we'll do a further projection later on just to give you kind of a analysis here. Okay, so the number of outstanding shares, this is the share dilution, just to educate people because some of my course members are on here as well. I'm going to go ahead and do an overview. Oh, yeah, that's an I. Yeah, exactly. No. So let's look at the, where's the shares outstanding here? It's 470. There it is. Sorry, I just skimmed over. Oh, there it is, right here. So this is the shares outstanding, including the dilution. Okay, guys. So we're gonna just put this here, and I want you to focus on this price target here because it's about to show itself. So by doing that, you're gonna call me crazy. Clover Health's price target is $274. Now, hold on before everyone's like, whoa, what's going on? Let's calculate what that market cap is, right? Let's do the math here. So $274 divided by the $2.30 it's trading at. Assuming that the market cap right now is approximately 1, we're looking at $119 billion market cap for Clover in the next, 5 to 10 years, right? So do we have any other companies we can relate to? Let's look. We have Anthem, which look at that. Their market cap, let me zoom in here. Their market cap, Anthem's market cap is $105 billion. Humana is $52 billion market cap, $46 billion market cap. And this is a big one. It's a $400 billion market cap. But look at Anthem, guys. Just so you guys understand, this stock at some point was trading in dismal levels, and look at what it's happened to it. It's increased 2,700%. Now you might be asking, Al, I don't want to hold for this long. The market has become so efficient. This whole .com crash, for stocks to go down to 80%, down 90%, it happened over 3 to 5 years. We experienced that in 3 months. This whole .com of, all these SPACs crashing. What that tells you is that the market's becoming more efficient. It's becoming faster at being able to do these quick swings and resets. What that also means is that it's able to reset at a higher value fast. It's able to find the intrinsic value faster, which is what we experience for Tesla. Okay? So, however, I like to be a little bit more conservative, right? So now let's go ahead and let's project out to 2024 using 4.5 billion. Now we're growing at a 59%, right? That's a little bit more fair, right? Would you say 59%? By doing that, we're looking at a stock price of $78.24. And I'll be doing an updated graph here and doing a shorter video for people here, but we're looking at $78.24. By 2024, this stock technically should be $78.24, assuming that the market is pricing it in effectively. Now, we did a revenue multiple calculation. Remember I told you by 2024, assuming that the revenue multiple is 5. Let's do that calculation again for people that were here earlier. So assuming that 2024, they're going to make 4.5 billion multiplied by revenue multiple of 5. For people that don't know where I got this number from, let me go back up here. This is the graph for Clover Health in terms of revenue multiples. At its highest, it was 9.77. The lowest was 0.6. Define the half is 5. Okay. By doing that, you essentially get $22.5 billion. Now, sorry, billion market cap. Divide that by the current market cap. You're looking 19 times the current share price. We're looking at $44.80. Now, but I'm telling you, it could get to this level, but hold on. You got to apply discount rate. So assuming ultra bearish, 15% discount rate, we're looking at a $35.69. Okay. And that's 2024. That's that 15% discount, guys. You know, for a profitable company, they're going to hit profitability. I'm going to put P right here. They're going to hit profitability by 2023. Now let's go ahead and let's do a 12.5% discount rate. We're looking at a price by 2024, I would say comfortably around $50, right? However, this company is trying to take on these people. It's very clear. I think the company that got hurt the most was Humana, with the CEO kind of literally crying, right? And look at its growth over its lifetime, right? They're at a $52.64 billion market cap. So if Clover Health can ascend to that, by just taking that market cap, and if we divide that and multiply it by the current share price of Clover Health, this is how much Clover Health could be, right? So my price target has increased for Clover. The biggest issue right now is the cash burn. They're burning sometimes it's easier for people. Sometimes it's easier for people to look at graphs, because I showed you guys the cash burn here, okay? I showed you the cash burn here. But sometimes it's hard for people to visualize that. So here's a nice graph that shows you the cash burn. Here it is. These are your operational expenses, okay? So these are all the pardon me. These are all the claims they essentially had to pay out. And what you can see here is the Medicare Advantage, 204, direct contracting, 235. These are all the expenses they had to do. And they are increasing. So we're going to have to figure out this cash burn problem. Pardon me. So the end of the year, I would say, so this is where we have to get into the whole geopolitics, right? We can go ahead and set price. Short term, no one's going to be able to know. But I would say by the end of the year, I think that it will rise for sure. I would say if we can hit him with a revenue multiple of 5 multiplied by the $3 billion. So this was the question here. I would say we might be able to hit $29, but you have to understand, 2024, I would say 2024, I would say $50, give or take, right? So you're gonna get these oscillations, right? You're gonna get, it might hit 30 and it might go down. And I'll be there with you every step of the way, and I'll tell you if you really want how to trade this, right? And so that's what it could be. But, always, just take half of the estimates. We might see 14 or 12 bucks, to be quite frankly honest. And if we do see 30, then Clover is going to take advantage of that and do a share offering, right? So now that we know, how you doing, Jake? What's up? What's up? Exactly. That lives and yeah. I agree. Yeah. Mm-hmm. Absolutely. Cost will eventually, they're just trying to grow, right? And we already know they've mastered the New Jersey market, right? If they can apply this to other markets, then yes. So now that we've went over this price target, and now you guys have an understanding, I like to graph this, right? And I'll give you a graph representation in the near future here. But now that we talked about this, let's talk about a couple of other things here. And I'm trying to see in what possible order. Yes. Okay. So give me a moment here. Let me drink some coffee and then log in here. One moment. So, so now, if usually when people do a share offering, it depresses the stock price temporarily. And honestly, at this point, we already know where this company's headed. I'm actually looking forward to it. It means that I'm able to buy a dip. And most investors, I'm sorry, I may rephrase my sentence. Most speculators, naive, wannabe investors, if you want to call them, my apologies for being rude. They were going to buy at highs. And then if we can price this sell-off in terms of share offering, we could, they'll freak out, hit the sell button, panic, and then we'll be able to come right in, right? So, and again, this is the talks that these institutions talk amongst themselves with the tables and how, this is this is Wall Street, right? So, all right, so I'm trying to think here what I wanted to show you guys. Yes, so I know what to show you right now because I wanted to show you guys something very important. And I've showed you guys this before, but I can't stress this, more than ever. So put this here. And then we're going to go ahead and sign in on, okay, good. Exactly. That's exactly what we're going to be doing. Yes. So I'm going to put this here. Thank you for reminding me. Thank you. So we're going to go ahead and do DC off of the table so you guys have a good price target. Okay. So just quickly here, Clover. Okay. So we're going to be looking at, let's say if Elizabeth Warren, Bernie Sanders, let's say they removed their whole DC from operation. What is going to be the price then? Right. So first things first, if you look at what retail has been doing, small investors have been selling, even the medium ones. And if you look at the ownership of Clover, it has gone down from 52% to 39% from retail. The yellow is retail. Institutions that are in orange have increased to 22%. In fact, they're at 27% now, and they're only going to grow up even more. Venture capitalists and private equity firms literally doubled from 6% to 11%. Guys, individual insiders, Chamath, can't buy any more of the company. They won't let him. He wants to buy more, trust me. Right? They won't let him. And retail is just giving up shares at this point. Okay? All right. Dumb money is selling, smart money is buying. And what is smart money? This is smart money. 2 million, 22 million, Vanguard, 22 million, Citadel, 13 million, 6 million. These people are increasing their positions by the millions, guys. 24 million, 16 million, 19 million, 500,000, 5 million, 4 million. This was an increase of 11,000%, guys. And we're almost approaching an equity hedging index peak, which means that we might actually start to rebound. And we'll get into this. I'm going to get into the calculation right now. I just wanted to give you an example. You might be asking yourself, I don't believe this. How can a stock sit at $2? Because that's what I used to ask myself 10 years ago. How can this $2, $3, POS sit at this level and then all of a sudden go up to this? Guys, this is how Wall Street works. Right? So look at this. They're buying right now. They know the value of the company. Retail sold. Look at that. 19 million, 17 million, 10 million, 5 million. And puts are being closed left and right. Goldman Sachs decreased their puts by 100%. Look at all the puts. 100% decrease, 100%, 100%. They decreased Bank of Montreal. They decreased 100% and they increased their shares by 3,000, almost 4,000%, 2 million. Bank of America decreased their puts. Look at that. These guys here decreased their puts by 100% and they increased their ownership in Clover by 136%. So we'll go. We'll talk about Russia right now later on, but right now let's switch back to calculating the removal of the DC, which is very simple. Like I said, how do we calculate that? Very simple. We just use a growth rate of 37%. That's it. We just destroy their growth because they can't grow anymore, right? If let's say by doing that, the price target shrinks down to $13.05, and that's using a 12.5% discount rate. Assuming a bullish situation, which I think, especially if you're having this, we're looking at a $19.41 price target by 2024. That's the bearish, guys. That's the bearish in terms of the price. But now let's assume it's the worst. We want to give them, not all retail sold. Hell yeah, exactly. So now let's assume the bearish of the bearish, 15%. We're looking at a price target of $9.37. Are we starting to see where Bank of America and Chase are at? They don't believe Clover Health's technology is going to yield them. Thank you so much, Otis. I really appreciate it. I love you. I really appreciate that. No, God bless you. Thank you so much. Again, anything reinvested in this channel will be reinvested back to you guys. We're going to get a better setup. We're going to get just, I'm going to be a doctor. The University of Arizona, they accept medical students that, we don't care about, I'm business, but we care more about community, right? So that, these are the types of people that we are. So anything that isn't bring us into this community, we'll bring it back to retail. Because, how many times have we been screwed over, right? So I appreciate that. Thank you. So Bank of America, Chase, all these big firms, they're pricing Clover at 37%. Not so much because they believe DC is going to go away. No, they know it's not going to go away. The United States needs help, right? What are they? They're already attacking oil. What are they going to do? They need help, right? But what they do believe is they don't believe the Clover assistant's going to work. They believe it's just going to be a normal 37% increase. But even then, with the most bearish of bearish, $9.37, and we're sitting at $2 right now. If you take that in terms of the revenue multiple here, let's say 9 divided by 2, not revenue multiple, we're looking at 4.5xing your money. Now, are you starting to understand why these investors now, they're finally these big institutions are buying? It's easy money here, right? But that's assuming the worst. That's assuming that direct contracting is going to be gone. That's not going to happen, right? So I hope that answers the question in terms of what do we believe, pardon me, what do we believe the Clover Health price target would be for if there's no DCs. And you're starting to see that it's contracted, right? But it's anywhere between $9 to $20 at an average around 12 to 14 bucks, I would say. $12 to be exact, right? So around that area, right? So that is the answer there, okay? So now let's go ahead and switch gears to talk about something extremely, developing and interesting right now. And I don't think people are talking about, I don't think the media is unfortunately going to be doing a good job explaining this. So give me a moment here. Let me find my file here. Give me one moment. Okay. So let's open. All right. So before we go into this whole Russia thing, COVID pretty much is, yeah, from my understanding right now, and people who are physicians in the chat who have more patient experience than I do, please speak to us about COVID. But I do think death rates are still up. I'm not too sure, but states are releasing back their mandates. The American people are tired. Canadians are tired of this whole mandate thing. And at this point, people believe that they want to, they would like a personal choice, right? So I do believe the mandates are definitely going to start rolling back. But before we get into this Ukraine thing, I do want to talk to you guys about something important here, okay? So let me actually do this here. Sorry, let me make sure this is accurate. And please tell me, do you guys like these lives, or you guys like to go back to video format? I really like them because we're able to interact. I can ask what, really quickly. I can answer questions. The editing process is, cumbersome, takes time. So it's nice to just get to the content, to the meat of things. Then, what is this? VUMNGO? Are those stocks? They sound familiar. I'm not too sure. Sorry. All right. So, all right, guys. So let's push this here. All right. So this is our private Discord channel. Here we have our live stocks, live crypto, and I have to tell you, there's approximately $22,000 yearly of resources invested within this Discord, okay? A lot of YouTubers out there are selling all these things for so much money, and it's not, I would say it's not worth it. I don't want to start any YouTube drama. But people are essentially they're ripping off their subscribers by not giving them a lot of value. So I have this artificial intelligence platform, this AI platform, which essentially gives you crypto signal breakouts, stock breakouts, or when they're going to break down, social spikes, obviously important news, analyst upgrades, whoever's buying in terms of insider selling or buying, dark pool data, actual stocks of what is being bought through the dark pool. That's extremely expensive. Golden sweeps, how many options are being bought at over $1 million following the money. Normal sweeps. Scalp positions in terms of when to enter. What's your target? What's your stop loss and your potential profits? Bullseye, which is a sophisticated artificial intelligence AI system that gives you the percentage rate of success and where to buy and sell your puts. Same thing here. One of our members was able to enter and got like a 20-30% increase. You can get all of this. And essentially all of this for $9.99 a month. That's it. Look at this. And you can find it in the link down below in the Patreon group. You'll get access to all of this. Now, for the short term, if we go down up here, we also have commands as well. These AI commands. In the short term, let's look at this stock research here. You see, we already have our members typing in a couple of stocks. This is called a Monte Carlo projection. It basically takes a look at where the stock price is headed. Let's go ahead and let's take a look at Clover Health in terms of its support and resistance. So this is basically where we're at right now with Clover. We need to pass the $2.62 in order to get back to $3.72. I would say it is definitely a mission to get back up to $7.50. There's a lot of support and resistance that it has to cross. Okay. Thank you so much, Scott. I appreciate that. And once it passes the $7.50, well, we know that there's a huge gap up to $12.80, right? Remember that time where the stock started free falling right here, right? So that's the huge gap up right there, right? From here. So this information you guys have access to, you just put in whatever stock you want to look at, and it's unlimited. You can search anything. You can be up here all night. I don't know. We don't care, right? There's a learning platform, okay? There's other things as well. Unfortunately, there are other stocks that I don't have time to talk about with you guys because it's just so much. We've analyzed over close to 100 stocks here. For example, Mara. People that don't understand Mara is a Bitcoin mining, crypto mining company. Well, we know crypto's not doing well right now, which Mara follows usually, right? And we set price targets. Guys, this stock is going to go up huge, okay? But again, I give you guys also hedges. For example, gold. This was February 17 before Ukraine invaded. I'm like, this is what I said. A hedge against inflation. Warren Buffett bought this back in 2020. He ended up selling, but then I talk about the feds, and also I don't like buying on green days. Lastly, if Russia does go into war, expect gold to rise. And if we go to, I spelt that horribly wrong. If we go to finance here, look at gold. Gold has risen so much. Look at oil. And we also gave price targets for oil above. So, anywho, there's a lot of other there's a lot of other companies that we give price targets to, and a lot of the price targets just recently hit. Yeah, there's people that are online right now typing in. But yeah, if you guys want access to this, just the AI itself would cost you $2,400 a year. That's just that. And we're just $9.99. That's it. And you can cancel anytime. Again, the goal of this is to give retail back power, and you guys will be able to get dark pool data, algo flow, which is normally $120 a month anyway. And that's the whole point. And the beautiful part about this, every time someone invests back into the channel, we will slowly start increasing the resources here. Soon we'll be doubling down on the Bloomberg terminal, which is an additional $24,000 every year. And will be 45 K per year. But that's the type of resources that we want our members to have access to. Right. You also get these other things. These are not impressive. These are just kind of telling you where visually where the market's going. And most importantly, though, I wouldn't say most importantly, we also give top short squeeze plays. For example, we just recently, our stock back in February 10, Indo, we called it out on February 10. It ran up a massive 351%. So we're winning in this market, right? In terms of, right? That's what you got as an investor. You got to have to make money on both bad markets and good markets, right? And that's what I'm trying to do here, right? And yeah, so that's it. If there are any other questions that you guys have that I could answer. And then quickly, just to go over the Ukraine thing, because most people, fortunately, yeah, they don't, the news problems, right? They don't give good news. All right. So Russia has, I believe, invaded into Kyiv, and they've been bombing, and their developments are continuously being updated here. These are, as of this morning, the current projections. We had 190,000 Russian troops near the border between here and Ukraine. We have 205,000 active troops as well. Again, Russia has the advantage. The problem is Ukraine's not part of NATO, which means that the United States and NATO can't really get involved. But what they can do, and Estonia, Poland, and all these other countries here, Romania, the US have sent troops along with the European Union, NATO troops, to essentially guard them because they are part of NATO. And which means that if Russia does attack any of this, if one missile lands in here, it'll be an act of war, and it'll be NATO against Russia. So this will be an active world war, which they won't. Putin would not do that, right? But just a quick here, what I want to get out of this here really quickly from this graph here. But as you can see right now, Ukraine wasn't going to be incorporated into NATO this year. We're looking maybe in 2030, 10 years from now, 2032. But essentially, this is what's happening right now. These are the separatist-controlled regions here, which Russia didn't announce that it's its own independent nation here. Here are the pipelines for people that don't understand what Nord Stream and all these other things are. So here is a pipeline that's currently starting to be developed. Was halted by Germany. And as you can see, Russia basically has literally entangled support from the EU. Essentially, the EU is living off of Russia's oil, right? Let me drink some water here. No, yeah, and that's exactly what the end of the graph is. This is a short-term blip. The markets are going to recover. In fact, I hate to say this because what Ukraine is experiencing right now is terrible, guys. But this is a stock market channel. And, remember, they only have two pipelines. What are they going to do? To start digging when Russia's bombing them? It's tough, guys. And do you think Russia cares about those two pipelines? They'll just rebuild them, right? So it's usually when the stock market crashes after a war, it rebounds 25% at least, right? So here's the Nord Stream 2 that's being planned, and there's the Turk Stream, but Germany just basically kind of stabbed itself, saying we're not going to do this. Expect inflation to increase. This is not good for inflation, and Putin has planned this for many years. And I will show you what I mean by that. The dark red are Russian military positions, and this obviously is updated. They've been advancing. These are temporary sites. Boris Johnson recently tweeted this morning is saying he's appalled by the horrific events in Ukraine, and I have spoken to President Xi to discuss next steps. President Putin has chosen a path of bloodshed and destruction by launching this unprovoked attack on Ukraine. The UK and our allies will respond decisively. Unfortunately, they've just been doing sanctions, but let's put it this way. Russia's economy now is going to go in the toilet. They've been planning for this, right? But the normal lives for Russia now is this was not a win for Russia. Russia, unfortunately, right? So the stock market, and the reason with all these sanctions, the stock market has plunged, but Putin has deleveraged himself from the United States. U.S. debt owned by Russia was decreased by 2018. Now, again, you might ask yourself, why, Trump was nicey with Russia. Why? Listen, guys, numbers don't lie. Russia, United States is very tactical, is very smart. They're trying to understand why Putin was just suddenly decreased the ownership of U.S. debt. So the reason why is that why people buy U.S. debt is because U.S. is not going to default on its payments. It's not like you're buying from Joe Schmo, right, who has a credit score of 50, right? Lowest credit, 500, right? United States pays its debts. However, if you don't listen to them, they have the right to say, we won't pay you, right? So Russia anticipated this back in 2018. The pandemic got in the way. They were going to probably invade into Ukraine faster. But the pandemic got in the way, and it accelerated the loss in terms of GDP, because Russia's GDP is what, top 30, top 4? It's nothing. It's low. It's a dying country, right? So what have they been doing? Well, they've been decreasing their debt while everyone's been increasing their debt, right? And what they've been doing is they've been actually buying gold. I mean, look at from 2015 to 2022. Guys, they've been buying gold. This guy has been planning this event for a long time. He's playing chess. And now he planned it at the right time when the country is down on its knees, when we're getting areas of 50%. I mean, guys, listen, inflation is tough right now. And the crazy part is Ukraine and Russia is not like, the Middle East, where you can, having an impact in Iraq may not sway them, maybe might sway oil. But Russia's an exporter of a lot of things, such as grains and whatnot, especially Ukraine. They account for a quarter of that. Well, exactly. I do believe they did some sanctions. I do believe there were some U.S. and other countries. But it's always on and off. I need to be a little bit more specific. I'm only like in terms of the numbers. So I'm not too sure. In terms of this, I really do hope we learn. But unfortunately, if we didn't have troops in South Korea, North Korea would have invaded South Korea. If we didn't have troops as peacekeepers, unfortunately, the world would go to chaos. Remember, we Americans used to mind their business back in World War I, World War II. It wasn't until other countries started poking the bear until we started to get involved, right? We're like, okay, listen, guys, can you just leave us alone here? Now the United States is getting involved, and this is the cost of being a world leader. The problem is us not stepping in Ukraine right now is going to unfortunately hurt the US dollar. It's going to give China an opportunity to invade Taiwan, which we will go over. Why? We will go to war over Taiwan because they have semiconductors, okay? So because of this export of grains, we're having problems now with food, inflation, food, grocery shock, wheat surges have increased, corn crunch in terms of have increased as well. Record high aluminum. You might be asking yourself why aluminum? Because look at Russia. Russia exports aluminum and all this gold. Guys, the economy is going to take a hit with Russia, which is why we're trying to isolate them now. The ruble has been, in terms of, for the value of the ruble has been going down, as you can see. You might see why. Well, the graph's going up. It's because you have to have 80, 90 rubles for $1. So the ruble is losing value. Bitcoin is not the safe haven that we thought. It's crashing. Now, China has not condemned the Russians because China needs energy. They're growing. Russia has oil. China has money. They are great partners. And this has been a big failure on the part of the United States by allowing these two countries to connect. Okay? There are the main trading partners to China. Germany, though, we were able to get on our side. That hurt Germany a lot, but definitely it's going to hurt a little bit of Russia. But what people are not talking about is Iran. North Korea in 2017, 2018 developed their nuclear program. Iran is developing their nuclear program. Are we starting to see the picture here? China, Russia, Iran, right? North Korea. The world, unfortunately, is becoming more uncertain as we go in. And these are developments that we should be monitoring. And that's what I'm monitoring as well. IMF predicts there's going to be a moderate slowdown to the economy. Geopolitical risks regarding the NASDAQ is falling. Now let's talk about some technical analysis. So the NASDAQ just recently hit a death cross. For people that don't know what that is, death crosses are reliable bearish indicators that suggest this is the future, right? This NASDAQ suggests further downtrend is going to happen. We don't know how far, right? Until we get a golden cross, right? But as of right now, expect possibly more downturn, okay? I appreciate that. Thank you so much. I'm going to go over the comments really quickly to make sure I didn't miss anything here. But not just that, the S&P futures just had a head and shoulders. So here's the head. You can draw kind of the eyes here, you know, almost looks like Groot's head. You know, I am Groot, you know. And here's the shoulders. But the problem is this is a bearish signal, which is why the RSI, Relative Strength Index, which basically measures if a particular security is overbought, oversold, usually from a ratio of 70 to 30, we're starting to see it's coming down, indicating that we might be going into some bearish territory. So, and let me just look at the futures really quickly here to compare here. So currently right now, we're sitting at $4,200, approximately $4,269 for the futures. And for NASDAQ, we're sitting at $13,900. There was a rebound today, and that was just temporary sanctions. As Russia advances more, we're going to go in and probably get a little bit more downturn here. Okay. So if we go ahead now and focus in on these geopolitical events, Pearl Harbor decreased the stock market by 19%. Iraq decreased the stock market in terms of the invasion in Kuwait, went ahead and decreased the stock market by negative 16%, but it was all meant through recoveries. Now, if you don't think that a recovery is going to happen, it means that the next war we're going to most likely fight is through sticks, right? Nuclear destruction, right? But if you don't believe that we're not going to go into nuclear warfare, then possibly we will recover out of this. And usually after a war, we tend to, it just resets, a beautiful reset, which is why we went ahead and did this. In fact, if you go to my Twitter here, excuse me here. If you go to my Twitter, oh yeah, here, live stream, watching my own live here. If we go here, back in November 13, guys, November 13, I said this in November 13. History sadly repeats itself. Ways to stop inflation. Raise interest rates. Okay, we're doing that. Raise revenue by increasing the tax rate. They're trying to do that. Cut government spending. They're not going to do that. They tried. What is not talked about is number 4, starting a war. Taiwan tensions. And now Ukraine. Okay? So to be in the market, you have to understand the macro, the micro, fundamental analysis, technical analysis, sentimental analysis, and in our mastering stock market course that's in beta access, we're going to take all of these analytical measurements and put them in. Now, for people that don't like courses, then we have this option, the Al Stock Alerts, which has a slew of resources that you will never get bored to. And everything will be found in the link down below. So all in all, it was an honor and privilege to be able to serve you during this live. If there's any questions here, please let me know. I am going to be putting a quick links down below for people that don't have Webull, people that don't have, I'm sure you guys probably have Robinhood, I'm not too sure, but for people that don't have those things, we have links to essentially get you a free stock from some free stocks as well in the links I'm going to put along with the Patreon page and all of that right here. So I'm going to put that right here. Now I also created this Clover Health cup. It's Clover going to the moon. I'm going to show you guys right now. Let me just put this link up here for you. So here's the link. And I think I just pinned it. Wait, let me see here. I'm just going to pin it really quickly. Give me a moment. Let me go get my cup, and I want to show you this, and then I'll answer some questions, and we'll conclude. I appreciate that, Jason. Thank you. All right, guys. So I don't know if you guys can hear me. So here's the cup. I created this cup. It's down in the merch if you guys want access to it. It's made to order, so they actually have to design it. It's fresh. So here it is. I don't know if you guys can see it. It's Clover Health to the moon. Oh, yes, sir. Yeah, I probably should show a picture. Wait, actually, let me increase the camera here. There it is. Look at that. Oh, there's the dog here. Okay. Clover to the moon. Isn't that cute? So I think we're going to be seeing that really shortly. But yeah, it's an honor and privilege. Let me go ahead and read all you guys. Section in Russia, oligarchs, Indiana from 2018. Exactly. And again, because, they deleveraged from oil, we were like, we got to hit them hard. My apologies, my golden doodle. All right, guys. So yeah, everything's good. Michelle, can you go? Does your membership teach option trading? So yeah, Jim Larson. So in terms of the Mastering Stock Market course, we are going to be integrating that into the later sections of it. But in terms of the Al Stock Alerts for $9.99, it actually tells you about options trading. Just to kind of give you a quick rundown here. So you can go ahead and look at option flow commands, which basically tells you what option traders are looking at. For example, you either can have a bullish divergence confluence like Lucid. We believe that option traders think it's going to go down a little bit more. Algo score is starting to creep back up, which means possibly on the day chart, it's going to go back up. So we do have stuff for options, but let's just say you want to have some support in terms of which options to buy and whatnot. You can use our bullseye, which essentially tells you Apple, strike price, AI % confidence ratio. Let's look at a put. Just recently, one of our students used this put option here with a Lucid, and it gives them the confidence, and they say, do a put. And I believe if we go to here it is, the AI really works. I did this on the bullseye. And this was his immediate profits really quickly here. 63%, right? So this is the power of the AI technology, and the beautiful part is it's consistent. And you want to have a form of consistency. So I think it did. Again, this is, if you guys want access just to this, you're going to have to pay $100 to $150 a month, $200 actually, just for that sliver. We have all these other things that we offer: crypto breakout stocks and all the things. Top short squeeze, which returned over 351% here. So let's put it this way. As someone who's going to be a future physician, we are very critical about our image to society. When you don your white coat, you accept a certain amount of responsibility that extends beyond the patient's bedside, beyond the hospital. It's not like you can go get on a bar and start dancing. There's a form of respect that you instill within when you have your white. It's hard to explain, but it's not yours. When people hear that you're going to be a physician, or when you're, there's automatic trust. So as someone who's going, future physician who's going into business, there's a key levels of trust that must be built, and which is why I heavily undervalued this. Not just because of the trust criteria, but most certainly because I want everyone to get access to this. There's a lot of people out there that are selling this stuff to make money, of course, but only certain people can buy it, which perpetuates the cycle of poverty. If people can't afford $10, then I wouldn't suggest them get into the market, right? So I think it's priced at a very, very significant price. The only reason why this is expensive is because I do Zoom calls, and again, that's my time, right? I answer questions here as well, but answering questions on there is a lot easier for me. Hence why I'm able to drop the price down significantly and essentially be able to share the love here. So here is some stuff that's also, so it does give you options, and it helps you direct you with dark pool commands, breakouts. You're able to basically see stocks, their support, and all, there's just so much. And I recommend, if you do get into our program here, I recommend you watching this video to help you. In fact, we actually made this video live for people on my YouTube. You'll be able to find it. So other than that, that's all. So that was to answer Jim's question here. Most certainly, I am going to definitely do that. My apology. I should have prepped. I should have seen what happened earlier in the market today, but I'll definitely do that, and we'll definitely discuss. So you guys like this live? I'm very happy that you guys do. I definitely, this is new for me to do this, and I'm happy that. Oh, hi, Adrian. Yes, from Singapore. Singapore is great. C Limited is a good stock as well. I'm sure you've ordered from there as well. They're doing great, I think, and we're going to be doing that next for the people that are in our Al Stock Alerts and Mastering Stock Market course. We're going to be doing an intrinsic value calculation on C Limited. I think they're doing phenomenal. Also, Mercado Libre, ticker symbol MELI. These are all great. Exactly. So the lifetime package, and make sure you use Save 50, you'll save $50, will include everything that I discussed in this video. Now check this out. It will become $1,000 once beta access is lifted. It's currently 70% off, and with an additional $50 off. So again, I'm making this laughably cheap, to a point where people are going to be like, this is too cheap. I'm making this. Listen, guys. This is a future doctor trying to help people that are in the have-nots have access to extra money. Because I know through research that if you guys have extra money, you'll be able to live better lives, you'll be able to eat healthier foods, and you'll have less chronic disease, less cardiovascular disease, less diabetes, and by the time you come into our hospital, it's too late. And I'm just trying to figure out, and I've designed nonprofits. I'm Tucson's 40 Under 40. I've designed a lot of things to help with the community. And I think this right here, bringing Wall Street to Main Street, is the best. And no physician has done this, right? A Hippocratic Oath said that warmth and sympathy may outweigh the surgeon's knife and the chemist's drug. So I believe this will be successful. So I did cover Canadian stocks as well. The beautiful part, my friend, is that there is a stock that you want me to cover, we do those as well. But what's cool is this artificial intelligence technology covers international stocks as well. Over 100,000, 150,000 stocks. I know the US has around 8,000, right? And we do have an eye on the global market as well in our figure here, which basically shows Canada, South America, Central America here, Ireland, United Kingdom, Israel, Japan, Russia, everything, right? So we keep an eye. And we do cover international in terms of our AI, right? And we also set price targets on some people that, So this is a global movement. We already have people from Israel, China, Hong Kong. People bought our from Hong Kong, Jordan. Shout out to Jordan, Europe, Singapore as well. Shout out to them. Russia as well. Shout out to them. Again, no hate on the Russian people. The Russian people do not want this. They do not want this. Okay, it's like brother fighting brother. They do not. It's like Iraq and Jordan fighting. What the hell, right? This is completely different. Absolutely. There'll be instructions on how to do that. It includes everything, and it will become $1,000, even up to $1,500 into the future. So this is definitely useful. So in terms of Indian markets, give me a stock. Let's actually, before you buy, let's see if it includes a stock that you like, right? Kind of a quick free trial here. Because again, I want to bring you guys value here, right? But the information that you will learn, though, in our Mastering Stock Market is how to evaluate a company. And you can use our intrinsic value calculation to evaluate any business, including the Indian market, any market you want, okay? So name me a stock. In fact, name me a stock that you like. Reliance? Okay, let's see here. Oop.
Reliance trades VOT.
Do you know the ticker symbol here? MMAT? There it is. Largest telecom player in India. MMAT. Okay. So MMAT is India, right? Is that right? No, that's NASDAQ. No, that's NASDAQ. We want an Indian one. So we usually, this thing does ticker symbols, so I don't know if it's going to be able to do this way. There's one way to find out. Let's figure it out. Yeah, I think I need a ticker symbol. But let's see. Yeah, you see, we need a ticker symbol. Ticker is Reliance. Yeah, then I guess we don't. I have to speak to this. We do international stocks, but I have to see here. Ticker, because we do have access to all. Yeah, that is a ticker symbol. Interesting. Let me just do a quick game here to see if we can even pull it up. You can set price targets too in DM. Yep, we got it. Symbol Reliance. We have the stock on our platform. Yep. Now it's going to send me a DM when the price target is $7.50, which if that happens, I don't think you want to live in India because the stock price is $2,250. So if it ever becomes $7.50, my friend, come to the United States, right? So, no, I don't think it'll ever become 750. But yes, we do have that. Yes, you do have the power of the Reliance. Maybe I just typed it in wrong. Let me just go into some things here, though. I want to know if we can do the algo flow for Alliance as well. Usually the stock does not have enough information. So yeah, so some stocks don't have that correct information, but if you do want the understanding the intrinsic value of Reliance, you can use our intrinsic value calculator, which helps you find the intrinsic value of any stock you would like, and that is worldwide, right? This is a Warren Buffett type of analysis, right? So in terms of someone wanting MMAT, let's see here. Stock research. So here's MMAT. Here's our Al Stock Alerts AI machine. This is the day chart for MMAT. So MMAT's hovering right now from trying to give you guys an example here really quick. So it's hovering right now between $1.50 to $2.13. And these are the support lines here. And this is essentially, it gives you the projection. And what you can do is you could do a Monte Carlo style assessment for a price target for MMAT. And if it can't do a projection, it means that there's just not a lot of data and needs to learn more information about it, right? But these are outlier stocks. The more you request them, the more the computer will learn. That's the beautiful part about this. But this gives you price projections. I believe here, let's look at Palantir. I believe I did one for Palantir. We have someone did this here. This is an AI predicted model. It basically tells you if it's bullish or not, if it's a good swing trade, and or it's going to go up intraday. This is end phase, and it said that intraday it is going to go up really well, and guess what? It did. We give you revenue estimates. There's just so much, guys. So much. It's just hard to go over. This is skills revenue. I'm just pulling up pictures for what our members are putting. There's so many things you can do. Big movers, Highland. Someone looked at them. Palantir, Pedro. You can use specific news from the analyst upgrades. There's so much. So yeah, there's a lot. Okay, and I think it'll be useful for you to look at the intrinsic value, but in understanding how to evaluate a company, because that's consistent. But this program, it does have access to the Indian markets. The software engineer is from India, so that I'm collaborating with. Tremendous, intelligent man. I know that we have access to the Indian markets. So yeah, other than that, let's see here. So there's your MMAT, Jim. We did the MMAT right here. There's all the other things you can do. You can look at dark pool commands, dark pool data in terms of where are people. Someone did AMC. Dark pool is actually purchasing AMC at these prices. Guys, you know what I mean? We have access to this. GME, all these different types of things, right? So Snap, right? All right. So other than that, it is a privilege and honor to serve you guys. This was a wonderful live stream. If there's any way I can improve, I can better serve you. I read each and every one of your comments. I try to reply to each one. I'm going to keep that up as much as I can. This is all about helping retail get a fair shake on Wall Street. And all I ask is that you help the next person out and, be able to do something good for humanity. because that's what it's all about. Okay. All right. So God bless you, and I'll see you guys on the next one.